Shares of Twitter off the lows now 29.76.
Good afternoon, everybody. Welcome, welcome. Hopefully everyone had a good trading morning so far. Plenty of volatility, that is for sure. Lots of stuff to work with today. Before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be notified and be able to sign up for email newsletter lists to be notified every time one of these videos comes out. Along with that, in the email itself, we talk about a bunch of stuff that we just don't have time to talk about in this live stream, and that's going to be everything from stocks, options, crypto, you name it. If it's moving, it'll be on that newsletter at some point. Now, of course, along with that, click on the live Trading subscription and trial info, where you can sign up for a free 3-day trial in the room with us, so you can hang out with us for a couple days, see what it's all about, kind of get a feel for how we approach the markets. It's just a really good way to kind of get a feel, get your feet a little bit wet, ask some questions, and hang out and have some fun. So make sure to sign up for that if you haven't done so already. Now, onward to the news. The news for tomorrow, we do have a decent amount of things coming out for once. It's been pretty light on the news the past couple days. This time around, though, out of the Euros side of things, we have the German manufacturing PMI for Germany, obviously, at 3:55 tomorrow morning, forecasted 58.1. Of course, out of the UK, we also have the 4:30 news. That's the construction PMI for April. And then at 8:15, we have the ADP non-farm employment change for April, forecasted at 200,000. 10:30 tomorrow, of course, we also have crude oil inventories, tomorrow being Wednesday. Later tonight, or well, later this afternoon, I guess, at 4:30 rather, we should have the API report coming out for crude oil. That'll give us a good idea as to where to expect the inventories to come out as. At 1400 tomorrow, we have some big stuff going on. The FOMC statements and the Fed interest rate decisions. The interest rate is forecasted to be 1.75, which is unchanged from the previous. And those are definitely some big movers. So tomorrow at 2 p.m. Eastern, we're probably going to get quite a bit of movement depending on what the markets want to do, but that usually does rattle the cage a little bit. Now, looking through the charts, of course, the euro is first up on the deck, and we have a pretty good bear continuation to the downside. Sellers are still pile driving lower. We were talking about yesterday on how, you know, is this going to be continuation or is this a reversal? You know, and we were, keep in mind, looking at it right here. And really the idea yesterday was kind of waiting to get more information. We want to see, does the market want to fall? Does it want to bounce? What does it want to do here? And, well, it did end up collapsing lower. And a lot of that clue came into how that 4-hour bar closed. Really weak. But it also started closing around the same area below that inside swing and almost on top of the other low closes back here. So that's not a good sign. Buyers aren't going to think, wow, man, I got to load up the boat that we're going to be flying higher here. That's not a good buy signal. And when it starts turning back around going bearish, even though that bear bar isn't that great, followed up with a doji and then a really nice bear potential breakdown candle, it's pretty much all she wrote before it went collapsing lower again. Pushed down into our next level of support at 25.45. Did hold there for a little bit before breaking down through that. Now we're holding it as resistance. And we're also at the bottom, testing of the channel. So if we go back a little bit further, we have the channel drawn from here to here. That is one of the areas that we're testing. And we also have the channel from here to here transposed down to the lows here, which is the secondary level. So we are holding, or at least testing those areas right now, trying to find some bouncing there to see what the market wants to do. Again, right now it's just kind of juggling, throwing stars, trying to catch that falling knife. Not a big fan of that. The sell pressure is immense. We have a lot of sell volume pushing down. Major objective at the big round number at 1.2. Maybe. We might find a little more continuation down there, but either way, I'm still going to be leaning on the sell side, even though this might be putting in a bottom sooner than later. I have to assume that the sellers are going to have the benefit of the doubt on this move lower, and that is kind of the game plan. Now, we are resting on some pretty big levels of support, so I don't necessarily think that I want to sell too aggressively anymore. I think the aggressive selling is done, and now we need to wait for some corrections and start selling into those instead. It makes it a lot easier in terms of trying to find correct trade location. Nothing else really to add or anything new to kind of put on here. Really just looking to see what the market wants to do. We haven't made it up to that 21,800 area yet, and chances are now by the time it actually does round around that area, probably going to find a better one anyway. So we'll get rid of that for now. New level of resistance on this drop lower at 21,280. Level of support at 25.45 is testing right now, and we'll notice we don't have any other levels of support, so we actually have to go backward a little bit to try to find some more levels to add on to the chart here, just so that we have something in case the market does want to keep falling. So we have another level of support, looks good here at 99,940. Let's make that a dash dot level because it has already been tested over here. We have another level of support coming in at 19,540, another level of support at 230, and another level, tested level of support at 90.30. And that should give us a little bit more to work with on this drop down. Now you'll notice we held that 2260 area very nicely. Obviously hindsight is always nice, but we will make that a dash dot level as well because it has been tested, and now that we have more to work with underneath us, we can get rid of that 545 area and just take it off the chart. So good hold so far. Ooh, I didn't want to move that. There we go. So everything is looking pretty good. Bears are still driving lower in the sell seat and looking for more continuation. And again, even though this might be the bottom and we could go flying another 1,000 points higher, I still have to assume that right now, at this very moment, the sellers have the bias, so I'm looking to sell into any type of bounce. Drop that out of the way. Over on gold, gold is breaking through major support. That beautiful bounce at 12.2 is actually a little bit lower yesterday. It held perfectly, and after that bounce, it immediately failed right back lower again. So a beautiful bounce off of that area, but we have now broken underneath it. I am going to keep that level on there, and I am going to be looking at that as an area of resistance on a retest. Everything else kind of following along with the euro. It looks pretty much the same. Level of resistance at 18.7, of course resistance at 12.2, and a level of support underneath us at 1300.9, not to mention just the big round number at 1300. We'll probably find a decent amount of pressure regardless. Sellers taking profit, new buyers coming in, etc., all in the same area. Really, everything else looks like it might be getting a little overextended. I think the big thing that really stands out here with gold is simply the fact that we have this nice bear channel working lower, and then they blew off the lows. And whenever you have a bear channel working lower that breaks out down, it starts getting a little overextended. The sellers are just doing too much too quickly, and it ends up that they generally at least correct back inside of it. Now, sometimes you'll see this overshoot and then double overshoot again, and that's where you start really seeing exhaustion, where the market starts pile driving higher and going back up pretty aggressively. We haven't had that yet. We only have one push outside of this. A secondary push down could put us at support at 1300.9, and of course, again, big round number at 1300 for that bounce back up. At the moment, this is a very aggressive bear leg to the downside. I am not going to be the one that tries to call the bottom. Generally, when you try picking bottoms, well, you know what they say. You try picking bottoms and you get a handful of, yeah, that's not what I'm really looking for here. We have a potential bottom, but I'm not going to be buying into this. I'm looking for a secondary leg to the downside so we can get that double overshoot below those lows and get into that support at around 1300s, 1300.9 in that area. Everything else looking pretty good towards the downside here. Just waiting for a corrective phase to sell into. On crude oil. Oh, crude oil, how you taunt me. We were looking for that resistance level up at 69.12 initially for aggressive entries, but then we also have the area above that at 69.38 up to 69.55. It missed it by just a hair. Just missed that area of resistance and went flying to the downside. So unfortunately for me, I wasn't able to catch that party. I missed the party bus, and that bus just went flying away without me. I mean, that does happen sometimes. That candle put in a high of 69.34. I was looking for 69.38. Missed me by 4 ticks. Oh well, c'est la vie, right? Nothing we can do about that. Pushing down, testing support. 67.66 and 67.46 on a faster time frame actually acted as beautiful support today. They're now starting to break down a little bit, but if we look in a faster time frame like a 5-minute chart, we can see that both responded pretty well as levels of support or resistance. If my chart will load here. I just cleared out the my database to kind of get NinjaTrader running a little bit smoother, so it's probably stopping a little bit. There we go. So really nice holding on that initial level. They broke through it originally, but still held it and pushed back up for at least a 1-to-1 on that actual risk, and they actually went a little bit further, probably 1.5-to-1 or so. So beautiful bounces off of those areas, but we are now starting to see price break down through. So looking to utilize these areas as resistance next and trying to sell it back down again. It's the same situation we were talking about before. We have a double press overshoot on the highs. Tried getting that mid-peak trap on the highs there, missed me by just a little bit, and now we're collapsing back down to the lows. Even though this is a huge level of support, we do not want to lose sight of the amount of support that's coming in off of these lows. If price can start breaking through 67.30, we should have a lot of open ground to cover to break down further, charging in towards the next level of support at 67.05, and maybe even further because 05 really isn't that big of a level of support. Looking for the next one at 66.23, so there's quite a bit of open space if crude can start breaking through the 67.30 support. Aside from that, potentially a new level of resistance coming in off of the highs here, which is going to be on the top of that big drop lower. And actually, did they leave behind a gap? They might have done. Let's zoom in just a little bit here. What's the close of that? 68.77, 77. Okay, so they didn't leave behind a gap. They just filled the gap to the tick, so nothing to add there. New level of resistance, 68.76. Looking for a breakdown through support. If they can get it going below 67.30 and 67.05, we've got a lot of open space, a good 60-70 cent drop down to the next level of support at 66.23. We shall wait. Over on the S&P had some really good overall movement to the downside, good bear continuation, breaking through support, which was at 26.4375. That is now gone. And the next level of support was retesting this kind of cluster area of back and forth inside of here. Now, it's easier to see in a faster time frame what we're talking about there at 39.5. So let's zoom into a 5-minute chart so we can take a look. Again, we got to let it load up a second here. There we go. So breaking down into that area, chopping through it, acting as resistance, trying to break higher, failing, resistance again, and then we broke through. Not really very good play around that level, so we can get rid of this area that obviously is not being paid attention to by the markets anymore. And we're looking for continuation to the downside. Now, the other level of support that we kind of torched through was this other one at 57 3/4. 57 3/4 is still a level that I want to pay attention to, but the one above that at 76.5 I want to get rid of. We're just not really respecting that area too much, and that was more derived off of these high closes back here than anything else, so we can get rid of that one. Cleaning up the charts just a little bit here, but we do have a new level of resistance to add, which is at 26.53. Sellers are still driving to the downside, and we are now testing rising channel support. If we can break through this, we have a decent amount of open distance, maybe another 10 points or so to the downside to 26.13s, and then we can start finding some more sellers taking profit, some buying support, etc. Of course, we could go in here and add a potential wedge top as well. But for the most part, the sellers are still in control. Sellers are still pile driving the market lower. We're looking to sell. If we can get a little bit of a bounce here, wouldn't be that much of a surprise. Sellers taking profit, etc. At the high, rising level of support. But for the most part, I'm looking for this support to eventually break down and gun to fill that gap. And that's really the big thing that I'm looking for, is a gap fill at 26.05. So, still looking for the sell side on the S&P. Nothing much has changed there. Over on the bonds, we still have that really strong bull corrective phase. We did back up a little bit and tested support at 143.03.125. Those 30 seconds kill me every time. Let's mark that as a dash dot because it has tested and it's still holding. We also have resistance holding on the highs, and we're just basically playing both sides of this. Buyers are buying into the dips, sellers are selling the rips, and that's just creating a situation where we're stuck in a range without a whole lot going on. Not that big of a deal for the most part. Really, I see this as a very strong leg to the upside, a corrective phase, and a secondary attempt. Now from here, this is where we need to see the proof. Are the buyers going to follow this up? We have that double press, back up and overcorrect the highs, or are they going to trip a little bit, stumble, and come all the way back down to the lows? If that happens, this bear channel is pretty much null and void. Obviously not enough to really worry about there anymore. Could potentially be even a wider, if I can get the low, a wider wedge bottom, something like this to work with, if we do begin seeing that breakdown phase. For the most part, nothing new to add. All the same levels of support or resistance. We're just testing a couple other ones. Still looking for that pop to 144 to see if we can find some selling up there to drive the market back down, but that's really about it. Over on some of the other markets, of course, we can't leave out I can't get it out of my head. I keep wanting to call it Intellistat. It is not Intellistat. It's Intelsat. Intellistat just rolls off the tongue easier. I don't know what it is, but we were talking about a buying support area at 951, and man alive, did that work nicely. We hit it pre-market. If we look at the market hours themselves, we can see that they didn't actually hit it after the market opened. That filled pre-market, so it actually gapped underneath that area and gave you some better areas to buy into underneath 951 before rallying back to the highs. Beautiful momentum to the upside, and I certainly cannot argue with putting in a high of 1161. That is $2.10 higher than what we were talking about with support at 951. Beautiful rip up. And man, really hard to be upset with that kind of movement. So beautiful move on Intellisat. I'm still going to call it Intellistat because that's what I'm used to. But some of the other markets, now that I is off the list, we have that beautiful rip higher. That's what we were looking for. Next up, of course, is MasterCard. MasterCard not really doing a whole lot, still holding the inside of this wedge top. They were unable to close above that. That is not a good sign. Sellers are trying to hold the market down, and as long as those sellers are successful, we're going to run into some issues here. So we need to see the buyers step up and break above that. And until that happens, it's kind of neutral to slightly bear tone right now on MasterCard. Still looking good if you compare it to other things like Visa. Putting in a new high and pulling back, and that's likely where some of the pullback on MasterCard is coming from because they're pulling off of the highs. Visa is pulling off the highs. Just sort of makes sense. But again, you know, with MasterCard, I think the big issue is just this falling resistance. It's got to get outside of this, and once it can, then it's all systems go to the upside. Having a little bit of a hard time at the moment. Twitter. Oh, man, Twitter. What are you doing? It looks so good. We had that beautiful bull bar to the upside, holding rising support, closing above those low edges of resistance, or in this case, support. And then it just does another turnaround day. It taps above the highs, triggers in buyers above it, and immediately reverses back down again. That is no bueno. That is not what we wanted to see on Twitter. I want to see more continuation to the upside, and it is just fail city right now. I don't think the buyers are necessarily done, but I do have to assume that the buyers who are getting into this, whether they're getting into it on the original areas we were talking about down here or over here or, you know, anywhere inside of here, impatience is going to start getting thicker and thicker. It's going to be harder for traders to want to stick around because it's just not doing anything. It's not doing what traders want. You get a bull bar, triggers above it, and then fails back down again. You get a beautiful bull bar, and then nothing happens. You get a bear breakout, nothing happens. Everyone's just kind of stuck waiting. And Twitter relatively lackluster right now. We need some follow-through to really kick this thing off. And even though today intraday movement was pretty good, same with yesterday, we're not seeing that follow through on the daily. So still holding, waiting, and waiting, and waiting. Boeing pulling back a little bit here. We do have the levels of support, 1739 and 1117, and actually just a little bit below that, down to 300 as levels of support to push the market back up again. Now that we do have a little more info, we can also draw a falling wedge top to give us some area of resistance to break out of in future if they want to. And again, you know, long term, I'm still looking for Boeing up in the 370s, 380s, but right now it just doesn't look like it's ready to fly. Bad pun, sorry. That's a terrible pun. Looking for support at 1739 and 1117 down to 300. See if they can bounce off of that and pop back up again. Aside from that, though, this looks pretty bearish. I'm not really too pumped on any other previous long positions. It's going to have a hard time here. Might have to see some averaging down, seeing some buyers buying on the lows, assuming that, you know, hey, it didn't want to work on the top. Maybe it'll work on the bottom. Of course, we do have the potential 3-push wedge bottom coming across the lows as well. And that lines up really, really nicely inside there. Creates kind of a triangle of interest inside of there for some heavy, heavy buying volume. We'll have to wait and see. One of the other ones that we've been talking about, live cattle, LE. Live cattle snapped down and tested support. That was back at 103.95. And that was kind of the area that we wanted to see. You know, the fact that they gapped up and then immediately failed yesterday, we're now starting to see what we endearingly call at Slingshot Futures. We call it, well, it's not a slingshot trick. This is actually just a swoop where we have a quick snap to the other side and now it's rotating back over again. And that's kind of what we're seeing right here. So we have a swoop on the indicators showing us that, well, this might be gearing up for another leg to the downside. And especially adding to that, all of the failure from the buyers. Buyers try coming in, failing. Try coming in, failing. Try coming in, failing again. Just a lot of consecutive failures inside of here on cattle. And we made it close. They made it close to that full deviation to the upside, but they have not gotten it yet. And if we can start breaking down this rising channel, then we are probably looking for a downside move to new lows. The way that it's looking right now, I think buyers are still trying to defend it, and they might be able to get a bounce here. But for the most part, it's not looking very good. They're going to need to really muster up some strength here to get something going. Otherwise, might have some issues. So that's really all that I had on the list. Feel free to type in any markets that you want me to take a look at for you. Some other ones that we could potentially look at. Corn, we talked about on and off. We are finally getting that rip to the upside. I mean, really, I think all that happened was we had that beautiful bull bar. They gapped all the way back down. They had to redo everything that they did the day before. Just ran out of strength, pulled back, grabbed the support, and went flying higher. Beautiful momentum play on corn. Of course, some of the other stocks that have been moving today, CGNX, getting some decent decent rallying to the upside after that monster gap to the downside. Pre-market, they got just obliterated. After market yesterday, the earnings came out and it just got torched, and it looks like buyers picked that up on a discount, and it's been going up ever since. Really, really bullish movement today, all the way back up again. And it's interesting because we had this situation where, you know, you can see it a little bit easier on the 5-minute chart, but this humongous wick right there, this little print right there, that really threw everything off, because now we run into a situation where when we get back up to there, there's going to be a lot of traders who maybe bought down here, saw that whip and didn't get filled on anything. They're going to be upset. Like, wait a minute, you know, how did I miss out on a 6% pop in 1 minute? Well, wait a minute, if it comes back up here, I'm going to get the heck out. So that creates a situation of interest where you got to pay attention to those areas where right there, I don't think I put it on the right level there. I think it slid off. There we go. At 46.25. And as the market gets closer and closer to that area, we're seeing more and more profit taking. Notice all the wicks on the highs now. We're starting to get a lot of profit taking up here as this continues to rally up. And 46.25 is going to be a big area of interest here on CGNX. We'll have to wait and see. But a lot of traders, I'm pretty sure, are going to be pretty upset if they didn't get filled on that little spike higher there pre-market. Going to be looking for a little bit more up to 46.25. That's really about it, though. Not seeing any other things being posted inside of there, so perfect. That'll do it for today. As always, underneath the video, make sure to click on the subscribe button, click the little bell icon to the right of that so you'll be notified every time we go live so you don't miss it. But overall, not too bad. You know, pretty good day of trading, decent amount of volatility coming in. We had plenty of trading opportunities today as long as you stayed patient, waited for the good ones. There was a lot of trappiness going on today, but as long as you were patient, probably had a pretty good day. Outside of that, though, like we always say, doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. If you have any questions, or if I missed any questions, feel free to send those to me in an email, jbrink@slingshotfutures.com. Until tomorrow, though, enjoy the rest of the trading day. Hopefully you have a good trading morning tomorrow. We got a plan. Now we just got to wait and see what happens for tomorrow's trading. Aside from that, though, enjoy the rest of the day, and we will talk to you all tomorrow. Thanks. Have a good one, and bye.